So let's move on to depreciation. Um, Depreciation is spelled wrong here. Depreciation expense and accumulated depreciation. The procedures used to test depreciation is going to depend on those controls. Again, as we know, when the controls are operating, then the risk associated with the controls, if the controls are operating well, then our need to do extensive substantive testing is not going to be as great. When we have if there's not high risk related to the controls, so our current estimates of depreciation is calculated and our ratios seem reasonable, then as a result of not having a low risk, we're going to do a lot more analytical procedures and not as much intensive testing. When we're dealing with a lot of high risk, where we don't trust the controls in place, then we're going to do a lot more detailed testing, foot the ledgers to make sure everything agrees, and we'll probably go in and recalculate how they're coming up with the depreciation just to make sure our numbers are accurate with their numbers. Okay, when it relates to intangible assets, know that with intangible assets, generally we're going to deal with the lesser of economic life or legal life. Patents have a certain legal life, but again, if new types of when we're dealing with medicine, say there's better medicine in the market, even though that's got a patent, what is the economic life of the supposed drug, or for whatever that is. When we're dealing with patents, if there's a new technique out for manufacturing something, even though there might be a patent on that machine, is it really going to last? Even though its life is that long, how much, what is the real economic use for that patent? So we need to just be aware, again, with the purpose of making sure our assets are not being overstated and our expenses are being understated. That's our worry and our fear. Natural resources are a tough one. When we're dealing with oil or resources underground, sometimes it's really difficult to know what's available. They can get estimates of experts, which is a good idea, but really a lot of this again is a guess. So when we're dealing with, instead of amortization or depreciation, if we're dealing with the depletion based on oils or natural gases, we're going to have to use some type of analytical procedures just to determine and get expert help in determining, is that asset being valued accordingly. Okay, leases. Why do companies prefer to lease versus own? It's cheaper. In the fact that they don't have to come up with the cash up front, which can be a big hindrance. Now, I should back up and say it's ultimately more costly to lease than it is ultimately to go out and buy something. But the cost up front can be a lot cheaper and less risk. You go out and you purchase an asset, you've got a lot of risk that you can't just dispose of that asset when the term of the lease is up. So there's more risk in purchasing an asset. A lot of times leasing is good when someone just wants a short-term amount of time with an asset. And a lot of the leasing really, fortunately or unfortunately, leasing assets versus putting them, purchasing them and putting them on your financial statements, it really is unfortunate, but it can skew, by purchasing them, it hinders your ratios. So when you're comparing two companies, one leases assets and another one buys them, even though the processes are exactly similar, the company who owns the assets are going to look worse off from the ratio, debt to equity, or, return on investment, than one that is leasing the assets. So it's in ways not favorable when you're wanting investors to come in to and invest in your company, and your competitor's going to look better than you because they're leasing. What do we need to do in order to inspect and audit leases? We want to get the lease agreements. Again, most important, we need to make sure they're recording it as it should be. There's criteria in order to determine if it's got to be a capital lease. If it doesn't meet any of those criteria, then it's automatically an operating lease, but we need to make sure they're recording it right, and then make sure that they're how they're flowing it onto the books. When we're dealing with capital leases, are they recording them at net present value based on the economic useful life? And then again, we've got to put into account that bargain purchase agreement that gets added to, you have to take all the lease payments, but you also have to take that bargain purchase agreement to add it to the present value of all future lease payments and purchases of purchasing that asset at the end of the lease. So all of that gets taken into account in coming up with that present value. Any questions, guys? Is this making sense? How are you doing? Boring? Thrilling? Okay, so basically we just need to make sure that we are taking into account and disclosing on the financial statements what we're required to when we're dealing with leases. Now, what I'd like to do is let's go and do a couple problems here, okay, for this chapter. Let's look at, I always love doing the multiple choice. And let me sign into this book, so okay. So we're going to be on page 742. Okay, 742. Let's start with the first one. Which of the following is not a risk related to fixed asset accounts? A, failing to record asset disposals. B, capitalizing repairs and maintenance expense. C, treating capital leases as if they were operating leases. D, changing depreciation estimates to manage earnings. Or E, all of the above are risks. E, all of the above are risks. Do we believe it? E, ARB, you got it right there. 1323E. Okay, next. Whoops. Let's see where I'm going. Okay, next one. Which of the following errors or questionable practices is most likely to be detected by a tour of the production facility? A, insurance coverage on the facility has lapsed. Okay, why though, Carmen? Why would that not be detected? This is just logical. Thank you, Arbery. We're just taking a tour. We don't know what's insured and what's not insured. Perfect example. I get a ticket last week. I get stopped. He wants my insurance paperwork. Of course, I can't find it. I'm calling my husband to see where it is. He doesn't have it. And I look at him and I said, I can't find it. He goes, is it insured? I said, I was going to say, Your Honor. No, I don't call him Your Honor. Sir, I would be stupid not to have insurance. I knew the name of the insurance company, but blah, blah, blah. He can't tell just because I'm driving a car if I've insured it or not, can he? No. But he did look at my past history because he knew everything about me, every ticket I've had, and he knew that I've never had a problem with not having insurance before. So, but based on just your automobile, they have no understanding of that. Okay, B, overhead has been improperly applied. How would they know that? They wouldn't. C, necessary facility maintenance has not been performed. You wouldn't, Arbery, how would you know that? Things are falling apart? We're gonna see stuff looking pretty pathetic. And then D, depreciation expense on fully depreciated machinery has not been recognized. So C is the correct answer, and we got it here. Good. Next one, guys. 26. Oh, excuse me, wrong one. 25. A company keeps its fixed assets records on a computer system. A unique 9-digit fixed asset ID number identifies each record in the file. The remaining fields describe the asset, its acquisition date, its cost, economic life, depreciation method, and accumulated depreciation. Which of the following audit procedures could not be performed using generalized audit software? A, select a sample of assets to be used in verifying existence of the asset. B, recompute accumulated depreciation. C, verify economic life by determining it is in the proper class. Or D, foot the cost in accumulated depreciation fields and trace the totals to the client's general ledger. C is right. Okay, let's look at D now, guys. A deficiency in internal control over recording retirements of equipment may cause an auditor to perform which of the following procedures? Would they A, inspect certain items of equipment in the plant and trace those items to the accounting records? Would they D, foot the subsidiary ledger and agree it to the general ledger? Would they C, trace additions to the other assets account to search for equipment that's still on hand but is no longer being used? Or would they D, select certain items of equipment from the accounting records and find them in the plant?
Just by the way you said it.
Oh, sorry. But again, this is so logical. If something is disposed of, we've got to go and locate it to see if in fact it's been taken off the books. So the best way in doing this is seeing what's on showing up on the ledger and then going and locating that asset. Questions, guys? Okay, how about 1327? In performing auditing procedures, the auditor may note the following circumstances. Which of the circumstances may cause the auditor to conclude that depreciation charges are insufficient? So, how are we going to know that there's not enough depreciation happening? A, large amounts of fully depreciated assets. B, continuous trade-ins of relatively new assets. C, excessive recurring losses on assets retired. Or D, insured values greatly in excess of book values. 27 is C.
Sense to me.
So, which of those circumstances may cause the auditor to conclude the depreciation charges are insufficient? So basically, it's showing us the adjusted book value is not getting reduced to what we're selling it for. Do you see what I'm saying? So technically, if we're depreciating it accordingly, then our adjusted book value should zero out in a good perfect world, should zero out what we're selling it for. Do you see what I'm saying? Yes, no. Number 28. Which of the following would not indicate possible asset impairment? We're not going to worry about impairment. Let's move on to 29. In auditing patents and intangible asset, an auditor most likely would review or recompute amortization and determine whether the amortization period is reasonable. This procedure would support which of management's assertions? Valuation? Valuation, right? Number 30. This is it. Which of the following is true of capitalized leases as compared to operating leases? A, only rent expenses reflected in the income statement. D, the leased asset does not appear on the balance sheet. C, liabilities include the lease obligation. D, future minimum lease obligations are not required to be disclosed. Well, when we're dealing with capitalized leases, as compared to operating leases, what did we say, guys? The answer is C. Liabilities include the lease obligation. So basically, when you take into account the capitalized lease, you calculate all of the payments that are going to happen, including any bargain purchase, and you come up with the net value, net present value on all those future payments. And we have to record those all of that's a liability on the books. Okay? So we have to record that when we're dealing with capital leases. With operating leases, we're going to end up with an expense, aren't we? It's going to basically be a depreciation. Does the leased asset not appear on the balance sheet? It's going to appear on the balance sheet. Liabilities include the lease obligation. And so in that respect, but the leased asset for an operating lease isn't on the balance sheet. It's only for a capital lease, right? But the liability section, that liability is going to be the present value of all the future lease payments. Okay, guys? Any other questions you have? What we'll do on Thursday is we will go over a couple more of these problems just to make sure that this information is cemented in. Any other questions?